Yo, yo, yo. Welcome back to the channel. All right, just a brief update here on SPY. We have been on point like crazy lately. So if you're new to the channel, make sure that you subscribe. Turn on your post notifications to be notified whenever we post. We do daily updates on SPY, and other technical analysis videos are on the way. We actually posted some YouTube shorts about the Elon Musk fiasco from yesterday. Those did pretty well, so probably a lot more short form content. You can also follow me on TikTok at Composite Dave, and on Instagram at Composite Dave. I have literally 0 followers there, so you can follow me there. I just started that account. Well, I started it a while ago, but I just posted there. And then obviously you can see in the corner, I added a little banner. You can, well, wait, that corner. You can join the monthlymacro.com, a free mailing list. And I am still in progress working on the monthly macro, and whenever it comes out, that is the way for you to be notified. I'm also going to have some free content that comes through there, so make sure you join there. And yeah, let's get into the video. So yesterday, what we said, so after we held the 0.5 Fibonacci in the previous trading session, what we were saying was what we're expecting is to stay in between this 0.5 to 0.707 range, because this is the likely retracement zone for SPY. And there's no real trend-based reason from a timing perspective for you to be breaking below here. Usually you're going to want to just capture this 0.707. So I am expecting a little bit of choppiness over the course of the next week or so, until you see a correlation with this green uptrend. This is literally our thesis from yesterday. Nothing has changed. Today, obviously, you had a big sell-off. Everybody on Twitter was frantic and wondering what was going on. You held the 707 with absolute precision. And so I'm expecting that you test this apex here. You probably break here, test this apex here, test this apex here, and then you probably have a breakout into this zone. Again, just like we said in the video yesterday, you measure the inverse Fibonacci to begin to get your price targets if you hold this trend. Now, keep in mind, if at any point you lose this trend, right? If you lose this trend, then this changes my entire thesis that I'm about to give you. I just think that this is the most likely scenario as of now, okay? So you, like I said, you're going to hold below. Now, this white trend that you're looking at here is the one dated all the way back from the all-time high in January of 2022. And then you have this CPI pump here, December 13th. Currently, I think that's the most relevant downtrend to be watching until you break above it and hold above it. And once you do that, then we'll start to look at this downtrend up here, okay? And I'll explain that again. We're literally just going to say the same exact thing that we said in the last video. But this one will be short, sweet, and to the point, okay? And remember, if you break the bottom green downtrend, none of this, I don't believe any of this anymore, okay? So yeah, so you're going to come up here. You're probably going to test here at this 0.5 on this inverse fib. Probably have a drawdown back here, okay, before you test this 707 up here. And then the way that we would figure out where price can go from there is, right, so we said this in yesterday's video. So we drew this downtrend here. It looks like this downtrend needs a little bit of adjusting, the big one up here, okay? So remember, we said when you have the apex of this trend match up with this 707, then that's a pretty good price target here, okay? So this is pretty much how I think the market structure is going to be. You could break up here a little early, and then perhaps this all turns into like this one move down here occurs, but I am expecting you to be pretty range bound. If you break below the green downtrend, oh, now I don't know which which one is which. Dang it. Let's see here. Yeah, something like this. You get the idea. So I'm not completely like, if you break down in this manner and then you have a quick recovery, I'm not completely turned off by the idea of coming back in. But once you lose this this green downtrend, you know, you're running the risk of, obviously, like I said, the upside potential going out of the window. Maybe, you know, you're going to trade along here. This is a more bearish outcome, okay? So if you stay below the white trend and you can't claim above it while you're below the green trend as well, that's a very bearish look. That's generally what the bears are going to be looking for. And then at that stage, you would be looking for an extension of, hopefully I didn't miss anything on the bullish side, but I'm pretty sure I didn't. I would pretty much be looking here, I think. Or maybe it's this fib. Okay, so you tested the 618. Okay, yeah. So if at any point you were to lose, is this uptrend correct? Yeah, it is. Okay. Holy shit. If any point you were to lose, what I would expect then is a failure. Obviously, you would bounce initially off of the 618. You would bounce, maybe test here, and then you would eventually fail down to the 707. And then I think that you would probably extend your retracement down here to this 707 would be a likely scenario. Probably wouldn't look so expanded like this, but you get the idea. And then from there, that would be a very bearish look, in my opinion, because then you would be holding below the white trend. I still think that this is the less likely scenario, okay, as of now. But if this were to occur, right, so you have this choppy thing that we just kind of drew here, then you would be coming back to test this fib range here, this 381.58. And I do think that you eventually do this, but I think that the first move is up most likely. And so just to telegraph that a little bit quicker here without being so complicated with the fibs, because you saw that earlier, make sure you rewind and watch it again. But you test here, okay? Then you're trapped here. Boom. Maybe you test this apex here, and then you redistribute down. This is the sort of move that I would be expecting if you eventually get to this 707, okay? So that's pretty much what I would expect it to look like. And then that would be invalidated if you were to break up here, okay? Or it could be invalidated if you broke up here and then you went like this, okay? And then that still doesn't mean that you're necessarily, it's off the table for you to come back down here. I do think that pretty much, unless you break this red downtrend that's way up here, it is, in my opinion, imminent that you will go down to 367 at some point. You will have this retracement occur at some point. And May is kind of like a bearish range for me as it stands right now. I just feel like the structure is still very distributive in nature. And so that is my bias. So that's going to be the video. I'm going to cut it relatively short. What do we have? 8 minutes? Okay, that's perfect. And be on the lookout. Again, follow me on all platforms. It's at Composite Dave on TikTok, Instagram. Twitter is David Marino Jr. And obviously, you're here on YouTube. I'll be posting shorts. I gotta record a short or something, but I'll do that. And then make sure you join the mailing list at themonthlymacro.com. Still working on that in the background. Trying to get a bunch of content going so that I can promote that, so that I can drive revenue, so that I can create more content. Because I think that it's really fulfilling for me to create content and educate people on stuff when it relates to technical analysis. And I think that the stuff that I can offer is really unique compared to what else is out there. I think that people can learn a lot, and you know, we can create a community that's more based on macro technical analysis. So that's why I started that project. But I can't really, as if you've been following me for a while, I can't really commit to content because it just doesn't. Frankly, it doesn't pay enough, and so then I don't do content. I just do stuff that makes me money. So if I can make content make money, then I'll do more content. So this is my first effort at that. Hopefully it works out, and if not, I'll try something else, I suppose. But I think that this is a really good idea. So make sure that you go join that mailing list so you stay up to date with what's going on with that. And until next time, I will see you when I see you. Peace.